Okay, excuse me. Morning traders, welcome to the morning playbook. I hope we're all doing well. Looking forward to the weekend. So I'm just going to go through a couple of things today. Obviously, we'll go through the intraday action that we're looking at. So we've got the Dow, the Nikkei, the Hang Seng, and the Aussie SPY. We'll have a look at those just levels of interest and what I'm expecting for the day. And what I'll go through just quickly is the markets. I mean, not much change overnight. We had the US, Europe was down on fears which flowed through from the US session to the Asian session to the US to the European session. And US opened weaker and then got ramped up as per usual. It's just the FOMO of on tech shares that continually driving prices higher. So we've got that. I think the US dollar actually was drifting higher, it was pushing higher, and then it was sold off right on the open of the US session around, I think it was around 11:30 or so. They had numbers out in the US employment data which were unexpectedly higher. So more claims, which is not good for the jobs front and confirms what the Fed Reserve was saying about a slower growth. Yet again, it just did not deter buyers. I think any sort of news, negative news, is getting bought up because they're just expecting further stimulus to support this market. So that's the general themes continue. Let's just get into the intraday stuff first. And then what I might actually talk about, I just shot out a video. It's on YouTube, sent out an email and all bits and pieces. So I might just talk about that because I think hopefully it was quite clear, but I might just touch on it while we've got some time. All right, so we've got firstly, you've got the Nikkei. We're looking for just that open. I want to see if it can flush out 23 and just start to reverse. You've got the longer term trend for this longer term MA starting to roll over and find some weakness, so that the Nikkei would tend to flush a level. Like all good markets, all good indices flush, and then they just rinse it out and then run. So rinse and runs mean rinse those buy stops. Anyone that's sort of selling in here just been stopped out and then turn around and flush down. So you also create any new buyers in the break. They're going to break on the open, which just happens all the time. They get flushed out as well if the market moves down. So that's what I'll be watching for. I don't expect some serious strength to come in the Nikkei and push back up to these highs at 23,240. I think that's they've had some rough economic data as well. So if that starts to play out, then I think we'll probably be left on the sidelines there. The Aussie SPY we'll get onto. The SPY looks set to roll over, but as it's done many times, it just jammed straight up through this 60.96 level. The US was positive last night. You're expecting, if retail open the markets, the pros close it, the traditional saying. If they open it, they're going to look at the US ramped higher, and they're going to go and jump straight back into our equity market. That's a possibility. It's just whether the SPY is, we built in. I think I was going to expect them to be up about 10 or 15 points on the open on the ASX. Now, if we get the SPY starting to tickle higher, we're expecting a stronger open on the ASX. So it's just whether or not this level can hold. I think if 60.96 can hold and can weather a bit of a storm on the open, if that's what's going to happen, then we might see some bearish price action today. I mean, again, it could just be chopping and changing between these two levels and lacking direction as the bulls in the US are still winning out and the bearish sentiment slowly increasing. I think our ASX, I wouldn't expect it to break up through the highs. I mean, it could be a positive today, but that 6,200 level is sort of the key. If it starts to break up through there in the coming days, weeks, then that bullish move is just going to continue. Jason. So I would be looking for, if it starts to ramp down here and we get a lower high, this sort of action I would think could play out into the weekend. But we'll just have to wait and see. Just wait and see the open. The open is key, because they'll blast through different levels continuously. Now it could just blast down like we did, I think, yesterday. We opened gap down, which no one kind of expected. But that was after a negative US session. So being a positive US session, the way it was ramped from a negative open all the way up, go and look at the NASDAQ chart, just ramped straight up. That could lead to some buyers right on the open. That fear of missing out, the FOMO effect. The Hang Seng's the one we'll be watching. That big sell-off yesterday, that was hard to enter. So I'm just going to chat about that today. Actually, it wasn't that move. It was another move we were talking about. So I'll just have a look at that. Looking at these two key levels, the lows, 24,620, we might get a push back down to lows. MAs, that longer term MA is rolling. We've got the shorter term MAs down. They've pushed down. We've got some contraction now, contraction back to the longer term. So if it's whether or not, if we start to get this bullish action, I think it's going to be a grind. I would expect to be a bit of a grind. So if we get a flush lower on the open and start to stick at a higher level, then we might get this rally. But if we sort of flush and we start to hold lower levels like this, that's what I'd be looking for a move back down to 24,620. And again, you just got to work the shoulders. Yesterday it was a tough one because on the 5-minute chart there was no shoulders to play off. It was just a straight push down, which could have been a bit of a heads up from the open, but I wasn't really expecting that kind of weakness to start to plow into the market. It was around here. This candle here went straight down. Last thing is a Wall Street. I'm not really worried about that lately because it's just a bit of a grind. It's following the other markets, whereas it's not leading like it was when the volatility was really starting to kick off previously. Yeah, when we had the big sell-off. So there's not too many moves on, for me anyway, on the Dow. Expecting it can maybe just grind up as it usually does. If we get weak Asian session, that's going to start to roll. Potentially, it might roll into the European Open. I would expect Europe to probably do the reverse, bounce up. They were negative to be a stronger open. Just follow that US sentiment, but we'll see. So next, I'll go over just quickly the US, the Dow. So the Dow, the dollar. So the dollar, we've had this ramp up. It was in our session and coming to the US open here. It was a bit choppy through Europe. You get Europe's open, banged it down, pushed back up. And I think that employment data was about this candle here. And employment data will always wash out a level, wash, and then come back down again. So if it's a negative number, we expect to move down. Firstly, probably expected it to flush higher, which it did. It flushed out these highs and then sold off the rest of the session. And that was, you would expect that's more related to stimulus. The expectations for stimulus on weaker employment data or more unemployed, it was higher than expected, a surprise. Then for me, they're looking for that extra stimulus. Not so much extra stimulus as much as they're expecting some form of stimulus, but to be on the high side rather than the low side, which has probably been pushing that idea has been pushing through lately. I think the 92.50 level is still key. We've had the big flush, bounce back, and if this level starts, if we start and this drift down onto it, I don't think it's going to create too much weakness. But if we start to lift back off that level, I think we're going to take out this 93, 94, and we're going to pressure gold. We're going to pressure everything linked to that we've been speaking about, linked to the US dollar. Now, speaking of things linked, crude oil. Look at the move, the smash down and retracement on crude. Fun market if you're trying to trade that. Yeah, you're right, Jason. There's a tough market on the indices at the moment because it's just lacking direction. We've got so many things which everyone's just waiting for. The only reason the market's been going up is stimulus, and we're waiting for more stimulus. So no one's prepared to sell out. Yeah, especially longer term if you don't get that stimulus. And I think that's what Trump is doing, is just delaying it, knowing that we're expecting it, knowing that we probably won't sell off until something happens. So if he comes out and says, I'm not going to give you as much stimulus, bang, I think the market will drop and US dollar will rally. So he's not stupid. If he doesn't want to give as much stimulus, he's probably just going to hold off. Better for him to keep these markets buoyant into elections is to hold off and to delay. So that's why, it's choppy. We got sort of that fighting between bulls and bears. It's making the entries tough. Sometimes, especially on the SPY, if you watch the SPY will rally, and then you're waiting for the pullback. You sit and wait, and it doesn't happen. And it goes straight up to the highs, and then you go, okay, I'll see if I can get a lower high. I might be able to work a short off. Bang, it just turns around and just starts drifting lower without much of a setup. So it's tougher going. So crude, big spike lower, just as fast rejected off that low. So the rejection is because of that weaker US dollar was playing into the hands of strength into crude, but the weakness is coming from OPEC potentially, or basically saying demand is not as high as we expected. We might have to cut production a bit more, and that's why you get the big spike lower. But it's like I said, rejected really quick. Copper started to drift lower, like we're speaking about. This is going to be that level where $3 level, 3.0000 is a level I'm interested in. This move up took out the previous major highs, that big high. The fact that we swung lower, this could be a washout. So if we start to get a drift lower again and we start to get some weakness coming to the market, I think we're going to take out that low. And again, it's just linked to that US dollar. So that, for me, this sort of rally is not as convincing that we're going to see a lot weaker prices on the US dollar. I think this market's starting to look at it. Crude the same. If you go and look at the Aussie dollar, well, where's that spike from? The Aussie dollar bounce. Look, it wasn't too bad, but I think it didn't react to dollar weakness as much as I would have thought. It was selling off because of the dollar strength, and then Yeah, it has bounced back. What was that 330? That was more 1130. So dollar was starting to find some strength. Sorry, starting to find some weakness coming to the US Open, whereas we were heading south. Okay, so it's sort of against the flow. But that rally there is more just on the back of a ramp up again of the Nasdaq and the US equities. It's just okay. Let's keep the ball rolling. But the problem is it's right near the MA now. So I think what this move has done and that big flush lower, major flush lower, and that bounce, it's just brought in. It's just going to kill sentiment for bulls because you see this action here. It's been swinging people in and out and in and out of this market. You're looking for a run higher and turn around and get swung straight back out. You might be looking for bullish action here, dragged in, swung out. Looking for some selling, further down to these lows here, turn around and swung back out. So I think it's going to kill the sentiment a bit. I think anyone that's going to be jumping in, if you want to buy, I think buyers will be struggling to be committed, knowing that things are just choppy. Right? So that's my take on Aussie. Now I just want to go over, yeah, no, that's it. Gold, I think, has got massive algo computer trading algos in it. You can just see the way it's grinding and grinding. It just continually flushes you out, sets you up, flush you out, set you up, flush you out. So, and the moves just will kick off hard. So it's kind of like okay, if you want to enter, let's say a dollar above, which you normally would a dollar above a price level, you're probably best to put it $5 above just to keep out of that swing. Because if it's going to go, it's going to go. But that's, then you've got to have wider stops and you risk getting swung out again on that, the pop up, the pullback, it's going to take out the low. So it's continually chopping both sides of the market. Where we're at, 9:52. Look, I'll just spend a couple of minutes. I just want to go over what we were talking about, and I'll go to the SPY. Actually, the SPY is not so good. I like the Hang Seng. We'll go to the 5-minute. I'll just try and find what I was talking about in the video. So you can refer to the video. It's just information. I had a question on, staying in a move, and I think it was in here. So it was all this action in here. Staying in a move. So this, we're biased. We're looking to be biased short. I think up here. Just to go through the moves, you've got a big, high lows, major high lows holding, pushing it up. This is the first contraction. We've got another high low holding here. It's pushed it up through the previous highs, but you can see that move up through the previous highs, which are around 25,500. Didn't get too far. Now, when it doesn't go too far, it's a sign that, okay, we could get some weakness coming into the market and a bit of a squeeze on all those longs that built up, starting to charge lower. So that's the premise for weakness coming in. Now we've got the market just coming into the open, spiked straight down. Okay, and this is on the CFD price, but you can see that any CFD traders were dragged in after the close. Market pushed back above the highs. The highs I had at around 25.50, so it's further down here. Pushed through the highs and just coming into the open, bang down. So once you get the open at 11.15, the market started to grind up. We started to get that selling pressure, so that was a bit of a heads up. You could have, and we actually did. I think the short we took was somewhere around here, 32. 25,432, and we took out some good little profits on that, and that was based around the 1-minute chart. But later on, we had some weakness, and that was more key. Once we started getting this high low holding, you've got a low coming in here and another low coming in here. I think it was off, if I remember correctly, somewhere in here. I'll check. No, it wasn't. No, it was here. It was here. Sorry, I'll take that back. So it was this weakness in here, which we alerted to a short, but I just didn't get the entry off, which is a shame because it actually did go really well. So the question was, when you're predicting weakness, like we've had all the prep work done, we anticipate there's going to be weakness, a bit of an unwind of some longs. So when it's unwinding, they're selling back into the market. That's going to, and then once you start getting that action play out, it's going to generate more selling pressure. So that's just sellers are going to completely outweigh buyers, and that's the premise. So that's what we're looking for. It started to play out. There's two things. One major thing is, which is key, and it's probably harder thing to get when you're learning. And I mean, even now, I still have the problem with holding on, and it's just the conviction into what you're seeing. And the hardest thing is when you're seeing things that play out the same, and they turn around and whip you out, and that's going to happen. And that's what stops are for, and that's what your risk management's for. But the idea is when you get it right, you want to leave the trade and not muck around with it to try to pull out as much gains as you can. Okay, so that's the key. That's key in any trading. So yeah, you're going to get a time when, okay, you go short here and it turns around and whips you out. that's going to happen. That's just going to happen. And that's why, like I said, you've got to have your stops in place, especially on the indices and the way they are at the moment. Have your stops in place. I think personally, I traded this short twice. I got stopped out in the first one by just cent or points, a few points, and had to go and commit and re-enter short. And it'll show up in the 1 minute chart if I can see it just here. Let me just going to take a second just to find it. Oh, lost my mouse. There we go. Looks to take off and do a runner. It was back here. Here we go. So it was in this action. So my bias was down. You can see that's sort of the grind higher. We've got this push down, and I always like to draw, across the lows. Once you start to break down, you know if we start to hold a lower level, which we did, that's key for me. And I was entering short on this candle, got whipped out, had to commit and go short again. So that's just by having that faith in what you're reading in the price action and that conviction in your price action and conviction in your prep. There was nothing here to say that we're going to turn bullish. It just happened to be that the market chopped me out before it got going, before it got moving. But luckily enough, I did enter short and made it all back plus more. All right, so that's the idea of having your conviction. That's your key part. And the second part, which I like to do to keep me in, or try to keep me in, I use this as a trading time frame. The 1 minute to me is a trading time frame, not so much, and it gives me a heads up of what could be happening on the 5 minute time frame. So what I'd like to do, and if we go back to this one's a better, because this is the example that we were discussing, that press down. Again, you've got that more and more evidence that the market's heading south. So your conviction should be stronger and stronger, if that makes sense. Conviction that the market's going to head south. So here was the short. It was somewhere around 404, I think, 405 was the short basically on this candle. And that's when you should start to break through this low, which is, to me, you haven't quite broken out of this contraction higher, but there's more than enough evidence there. You've got a push up, pull back, another push up, flushed out this high. You can see this is all minor price action on the minute, but that's key. It flushes it out, finishes below 1, 2, 3 times. Once you start to break down that through low, nothing wrong with that entry there at all. So it's a really prime entry. So what the subscriber, the person done, was key. He's done all the hard work. Problem is, it's just getting flushed out with this little whip. Okay, and the market's going to do that. It's going to test your resolve. It's going to whip you out. It's going to try everything to get you out of the trend. And that's also, it's trying to bring in, you get out, sell it. You're basically buying into some sellers that are trying to push that market down or trying to move it down. But ultimately, with action like this, that price action, all this price action's happened previously, and when you start break down again, that to me, you should have conviction. We're going to at least test down to these lows at around 25, 340, for example, and you've got to weather the storm. And one way I like to do it is not so much in that 1 minute. The 1 minute, I look for more for that extension. If it's getting extended, what's starting to happen on the 1? But I would flip this around and look at the 5. And the way I would look at that is to knowing, I've got to probably find it again, do I? Sorry, I should have had this pre-prepared. And miles past it, aren't I? Sorry guys, just want to go back. Here we are. You should have had it. Come on, Brady. There we go. When you're looking for that kind of weakness, so this is all marked up from the 1. We've got our entry. We've got this rejection at this level here. Watch, we were just discussing on the 1 minute time frame. The entry was around here. So on that 5 minute candle, you can see that the market's starting to press down. All right, we've got 1, 2, 3 red candles. And that again it goes after that action. I like to say you've got 1 push up, pull back. Sorry, let me just make this clearer. And I'll make it yellow. So this is off that move, 1, 2, 3. So that kind of move, when 1, 2, 3, when you end up at a lower high than previously, which is up here, you've got to be bearish. Okay, so that's what I'm talking about, conviction. And if you're watching it on the 1 minute and in the 1 minute and it flushes you out, you've got to expect some sort of chop. But I think your conviction or your entry is coming from that 5 minute chart. All right, because the moves on the 5 are going to be bigger. Once you get this price action, you're expecting a bigger move than just to this low and get swept out, especially when it starts to break down. So if you're looking for a move here and you put the small gain at 20, was it 25,390, for example, you know, it's a 20-point gain, but you could be leaving on the table a lot because that's starting to break down. That's the first sign that's starting to break down. And with this price action, you should expect a lower move. Does that make sense? And so what I would do is just start to follow behind what I was saying in the video, sticking my stops behind, trying to use the 5-minute as much as possible. And once you get an expansionary candle, then you can move it. Once this candle starts to close, it closes down here, you've got your stop here, and eventually you're stopped out anyway. Does that make sense? So that's what I would do. I'm looking to try to give it a bit of room to move. I would always use a partial exit, take a partial. You know, you might just stick to with a 40-point gain, a 40-point stop, a 40-point partial, or a 50-point partial, lock away some gains. You can move your stop if you can to break even, and then just to see if it keeps expanding in your favor. So that's the way I like to do it. And this is basically the way I like to approach the second half, not so much the first half of the trade or the bulk of the trade. I like to take a partial, but when I've booked that partial, I'm trying to open up the second half as much as possible. It's the same for trading equities, FX, anything. Okay, but that's the way I'll be approaching that market. Once I can open it up, you see where it goes to, and if it gets down to here and you start to, you know, this is probably in this 5-minute candle, you might be looking back at the one saying, oh, look, I'm starting to get a bit of bullish action come in. It hasn't taken out that low. You know, we've taken out the low and finished above. To me, if, you know, on the close, I would expect a bit of a bounce and then take out the low and continue like this. You know, take out the low and continue. Take out the low in here. We've just gone straight down. I would expect this to open, take out the low, not start to rally. So when you start to rally back into that candle, in essence, you could look at the one and start to say, oh, I might just reduce my risk even more on that partial, because you're probably expecting that move's extended. Okay, but you know, when it comes to that sort of side of the trade, once it's extended, you've got that expansionary candle, and this candle, I mean, you've got to look at, this is getting very technical. That's an expansionary candle. When you get a candle that's not quite as long or as hard, it doesn't go as hard. To me, it's just running out of momentum. Okay, when you start to run out of momentum, you could start to say, okay, maybe that moves down extended. I might expect some sort of back and fill. I might get something like this and another move to play into. But if I don't, I might get like this happen all the way back up to the highs. And so in that respect, if you're thinking something like that, you might want to take as much gains as you can and start to reduce your risk. All right, so hopefully that made a bit of sense there, guys. But that's a lot of that I've explained again in the video. So feel free to watch it and share it. Anyone that you know that might be interested, it'd be great if you can share that on. Thanks for joining me today. I'll be back in on Monday, but at 12:30 on Monday, we'll do an hour. Any questions you may have, feel free to send us an email to support@tradesetup.com.au. And it'd be great if you can like the video on YouTube. If you haven't already subscribed, please do. And I'll see anyone that in the Discord channel. I'll just be seeing if we can put up some trades, see if we can get something off on the Hang Seng or maybe on the SPY. Anyway, guys, enjoy your day, and we'll speak to you again soon. Cheers, bye.